Good afternoon, ladies and gentlemen. On behalf of Pondicherry branch and Salem branch of SIRC of ICAI, I welcome you all to today's CPE program on all about the new ITR-U and reassessment proceeding under the new tax regime. Now, the prayer song followed by the Institute motto song.
Okay. Pushparaj, please play the prayer and Institute motto song.
வாழ்வினில் செம்மையை செய்பவள் நீயே, மாண்புகள் நீயே, என் தமிழ் தாயே, வீழ்வாறு வீழாது காப்பவள் நீயே, வீரனின் வீரமும் வெற்றியும் நீயே, தாண்டிடு நிலையில் உனை விடுப்பேனோ, தமிழ் என்ன நாளும் தலை குனிவேனோ, தூழ்ந்தின்பம் நல்கிடும் பைந்தமிழன்னாய் தோன்றுடல் நீ உயிர் நான் மறப்பேனோ, செந்தமிழே உயிரே நருந்தேனே, செயலினை மூச்சினை உனக்களித்தேனே, நைந்தாயனில் நைந்து போகுமென் வாழ்வு, நன்னிலை உனக்கெனில் எனக்கும் தானே, முந்திய நாளினில் அறிவுமில்லாது மொய்த்தனன் மனிதராம் புதுப்புனல் மீது செந்தாமரை காடு உத்தது போல செழித்த என் தமிழே, ஒளியே வாழி, செழித்த என் தமிழே, ஒளியே வாழி, செழித்த என் தமிழே, ஒளியே வாழி.
सुप्तेषु जागृति, येष सुप्तेषु जागृति, कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः, तदेव शुक्लं तदब्रह्मा तदब्रह्मा, तदेवामृतमुच्यते अस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Now, I request Pondicherry Chairman, Ms. M.S. Manju Bashni, to deliver the welcome address.
Thank you. Respected Chairman of Salem branch, respected speaker of today's program, CA JIGNESHKUMAR PARIKH, my colleagues in the committee of Pondicherry branch, managing committee members of Salem branch, esteemed fellow professionals, good afternoon. On behalf of Pondicherry branch and Salem branch of SIRC of ICAI, I welcome you all to the virtual CPE meeting on all about the new ITR-U and new reassessment proceedings. Today, the speaker would be deliberating on the new updated return, which was introduced in the Union Budget 2022, reassessment proceedings under the new regime, and the defenses available post Supreme Court ruling dated 4/5/22. The speaker is from Ahmedabad, which is considered the birthplace of the tax planning by tax professionals. He is an active speaker of WIRC of ICAI. He is here today to share his vast knowledge and rich experience with us. We thank the speaker for readily accepting our invitation at short notice despite his busy schedule. Thank you, sir. Lastly, we thank one and all for your participation and response. I now request CAP Mohan Raj, SICASA Chairman, to introduce the speaker. Over to CAP Mohan Raj.
I take the privilege in introducing the speaker of the day. CA JIGNESHKUMAR PARIKH is a fellow member of the Institute of Chartered Accountants of India. He is a partner of Patel and Jeshalpura Chartered Accountants, Ahmedabad since 2013. He has an experience over 11 years in the field of statutory audit of corporate and non-corporate clients, including bank audit. Apart from this, his main areas of focus are management consultancy, financial due diligence, representation before income tax authorities up to the income tax appellate tribunal, designing SOP and KRA and getting the same implemented. He has delivered lectures on various topics of income tax, including ICDS and accounting standards in various branches of ICAI, Study Circle, Tax and Tax Practitioners Association. He has also worked as chief compiler of the compilation of ICDS issued by the Jamnagar branch of WIRC of ICAI during December 2016. He also contributes articles to journals published for members and for the financial year 16-17 and 19-20. The article written by him were adjudicated as the best article under direct tax category. He has been appointed as co-opted member of the Direct Tax Committee of Ahmedabad branch of the WIRC of ICAI for financial year 17-18 and 2021. In September 2020, he has received certificate of appreciation from the Indian Corporate Law Service Academy, Government of India, for compilation of reading material on the subject of income tax. Now, I hand over the session to the speaker of the day.
Honorable Chairperson of Pondicherry branch, Honorable Chairman Salem branch, all the managing committee members of Salem branch and Pondicherry branch, and dignitaries present here. It is indeed a matter of privilege to address the August gathering on these two interesting and important issues. One is the updated return and another one is reassessment under new regime, including the defenses available post the recent decision of Honorable Supreme Court. I always start a session with a note, and as a matter of fact, this is my first session in the South India, so I would say it is my debut session in the South India. So thank you for trusting me and allowing me to present my views. Ma'am, I always start a session with a note that after becoming a chartered accountant, we get the opportunity to learn only in two circumstances. Situation number one, when we get an opportunity to deliver a talk, and situation number two, when our client gets the show cause notice. So it is always desirable to learn under the first situation so that, when the situation number two comes, it can be converted into vitamin M. So I convey my sincere thanks to the branch for trusting me and allowing me. It is indeed, as a matter of fact, an opportunity available to a faculty to learn on a topic. I was given an opportunity to attend a session which was delivered by a learned faculty of Bangalore. He came to Ahmedabad. And he said a wonderful statement, and he said that whenever there is a chance to deliver a talk, the one person who gains out of the entire process is the faculty himself. So in terms of knowledge, in terms of the efforts that are to be put in. So I once again thank the Pondicherry branch and Salem branch for trusting me. And obviously, as I mentioned that this session would have a great impact so far as my memories are concerned, because it's the first session that I would be delivering in South India. So thank you very much. Now coming to the topic proper. Section 147 and updated written will deal with section 147. Ma'am, is there any sequence preferred? I would take 147 first and updated written later, or how it would be convenient?
Fine, sir.
Fine. Okay. So let's start with section 147. We'll deal with what exactly the section 147 is all about. And then we would start with, simultaneously we'll also deal with the recent decision of the Honorable Supreme Court. And then what are the defenses available? So first, let us deal with section 147. Let me first take you to section 147. Allow me to share my screen. Just give me a minute. Probably my screen sharing has been disabled. If I am I, or it would be fine. 1 minute. Just give me. Okay.
Oh, sir, you can share your screen, sir.
Oh, okay. Okay. No, host disabled participant screen sharing. That is the message I'm getting.
No. We will working out. So 1 minute, sir, please.
No issues. Take your time. Take your time. No issues. No issues. No issues. Meanwhile, yeah, meanwhile, just starting with section 147, what does it talk about? If income chargeable to tax in the case of an assessee has escaped assessment for any assessment year, the assessing officer may, subject to the provisions of section 148 to 153, assess or reassess such income or recompute the loss or depreciation allowance or any other allowance or deduction for such assessment year herein after in this section referred.
Sir, sorry for interrupting you. You are now host, so you can share your PPT, sir.
Okay, great. All right.
Done.
Okay. So referring again. So yeah. If any income chargeable to tax in case of an assessee has escaped an assessment for any assessment year, the assessing officer may, subject to provisions of section 148 to 153, assess or reassess such income or recompute the loss or depreciation allowance or any other allowance or deduction for such assessment year after in this section and in section 148 to 153 referred to as the relevant assessment year. So far, so good. Now let us deal with this subsection, section 147. They say that if income, so now this, if I compare this with the former 147, they say that if the assessing officer has a reason to believe that income chargeable to tax has escaped an assessment. Now the word reason to believe has been given a go by, and now they say that if income chargeable to tax has escaped an assessment for any assessment year, and that has come from if there is an information suggesting escapement of income. I will come to that this phrase little later, but then we can see that the word the phrase reason to believe has now been given a go by. So now the word reason to believe is no more with us. Now we can say that if assessing officer may, subject to the provisions of 148 to 153, if there is an escapement of income, he may assess or reassess that income. So the first situation which is relevant here is that is assessing officer. If income chargeable to tax in case of an assessee has escaped an assessment for any assessment year, the assessing officer may. So the first thing is the officer issuing a notice to me has to be my assessing officer. They further say that before I go to the explanation, they say that this exercise is to be done subject to 148 to 153, meaning subject to 148 to 153, meaning thereby before I go on to 147, they have to go to 148. So let us for a time being visit 148. Just, yeah. Let us for a time being visit 148 first and then go to 148A. 148, this section says, before making assessment or reassessment or recomputation under 147, meaning that before I go to 147, I have to go to 148. Before making any assessment, reassessment or recomputation under 147, and subject to the provisions of section 148A, the assessing officer shall show the assessee a notice along with a copy of the order passed if required under clause D of section 148A, requiring him to furnish within such period as may be specified in the notice a return of income or income of any other person in respect of which he is assessable under the act. Now 147 says that do it if permissible under 148 to 153, meaning thereby subject to 148 to 153. 148 says that it is subject to 148A, meaning thereby first I need to go to 148A. So let us, we go in that sequence, we go to 148A now. Sorry. So now let's go to 148A first. So that will give us a clear chronology, that will give us a clear way in which we are supposed to proceed. So now this takes me to 148A. We'll deal with the sections one by one again. 148, now they say that the assessing officer before issuing a notice under 148, meaning thereby 147 says go do it if permitted under 148 to 153. 148 says that before you issue a notice under 148 asking me to file a return of income, wait, go to 148A. So that's why I am now into 148A. Now what is to be done? They say that the assessing officer shall, before issuing any notice under section 148, meaning that before issuing a notice under 148, the assessing officer has to do a particular activity. The word here is shall, so it is mandatory. Conduct any inquiry if required with the prior approval of the specified authority with respect to the information which suggests that income chargeable to tax has escaped an assessment. Meaning thereby assessing officer has to conduct any inquiry with the prior approval of the specified authority. He has to take a prior approval, and after taking a prior approval, he has to conduct an inquiry. Even before I go to that conducting an inquiry, the important word here is the assessing officer shall, before issuing any notice, meaning thereby this entire exercise has to be done by my assessing officer. Meaning thereby, if the notice is issued to me under section 148A, if the gentleman is not my assessing officer, then this entire process fails. Ma'am, I hope you are with me on this, right? That the notice has to be issued by the assessing officer. Now, how would I be in a position to come to know that the notice has been issued by my assessing officer? That is the first thing that I need to check. So how can I do this? Now we all are aware that the first 148A notice that comes, it is not coming from the faceless, it is coming from the concerned officer, officer A, officer B, officer C with the name. How would I be checking that either he is my jurisdictional assessing officer or not? We can do that. We can straightway go to the income tax department's website. Just give me a minute. We can just parallelly do that. Income tax department, let's say, I'm just going to the income tax department's website. It's an income tax department. I'm sure the members are aware about this. For those who are not aware, I'll do this quickly. Here we have a jurisdiction tab. I guess my screen is shared and this is visible, right? So here we have a jurisdiction tab. I'm clicking on it. So here I can go to, here I can now find Karnataka. And then I can find it out like the officer. Now we can take any, you can take Gujarat, you can take Karnataka, from whenever you are getting a notice basically. And then you can find it out the jurisdiction of that officer, because that is available straight away here. Just give me a minute, it gets downloaded so we can have a complete clarity on that as well. So the first thing which I would be doing is that with the, now here I can see that what are the jurisdiction available of the concerned officer. Let's take an example. If I say ITO Ward 33, right? Then what is the jurisdiction that all employees of the of Canara Bank and subsidiaries, Vijaya Bank, ING, Vaishya Bank, Corporation Bank, LIC and other. So what are the jurisdiction available to a particular ITO? That is clearly given to me. Now this is precisely in Bangalore. This is the situation. Now that is available for your particular jurisdiction offices as well. So what if the gentleman has issued a notice to me? Let's say ITO Ward 131 has issued a notice to me. They say that all central government employees whose fifth alphabet of PAN is A to P, all employees of BSNL and ITI. So now let us take an example. I might be, now sometimes what happens that I have received a notice and I have never filed my return of income in the past. I might have taken a PAN quoting that this is other income, and normally people are taking a PAN quoting that other income. Then he has never filed a return of income. His PAN might be with any other authority, the officer. The question is whether he has a jurisdiction over me or not. If he has a jurisdiction, he can proceed. If he does not have a jurisdiction, he cannot move. So the first thing that needs to be checked is whether my officer has got the jurisdiction or not. If he does not have got the jurisdiction, then once again he cannot issue the notice. So first thing is that inquiry has to be conducted by the assessing officer. और उसके पास jurisdiction है नहीं, वो यहाँ से मिल जाएगा. हो सकता है उसका jurisdiction किसी like मेरा jurisdiction ward 1 के पास था, then the case might have been transferred to ward 2 for a time being. If there is a transfer of a ward, then there has to be an order under section 127. If it is within the city, I may not be given the opportunity. Not necessarily I should be given an opportunity. But if it is outside the city, the opportunity has to be given. Anyway, we are not going into those parts. But if my jurisdiction, let's say here lies 1, and then my notice has come from ward number 2, then I would definitely go and demand that, do you have my jurisdiction? If the case has been transferred from 1 to 2, do you have an order under section 127? If there is no such order available, then once again this matter fails, and we have a direct judgment on this on a Guwahati ITAT, ma'am. What has happened in that particular case is notice was issued by ITO, let's say ward 11, and then when they have made an RTI, when they have made an RTI, they come to know that the case has been, the notice was issued by ward 11 after he has issued a notice, after he has recorded reasons, after he has issued the notice. Thereafter, the case was transferred from let's say ward 11 to ward 12. Meaning thereby the reasons, I mean, of course, it is pertaining to the old regime, but then still it has a validity because the word uses that notice has to be issued by the assessing officer. So the gentleman is not my assessing officer because once you are aware that you are not my assessing officer, you have taken down the reasons, you issued the notice. Now you are transferring the case. That is absolutely not permissible. So that is the first ground that we can take, and this is the first step that should be the first step in my checklist, that when we are applying section 147. Correct. So that is the first thing. Ma'am, I'll share one of my experience that what has happened is that we have done an RTI for one of our clients, of course, in an old regime. We received the information, and in that particular case, we came to know that for a same case, approval was given by same principal CIT to 2 assessing officers, and that too in a time gap of 3 days, and that too in both the cases, income assessing escapement is different. In one case, income assessing escapement was 60 lakhs. In one case, income assessing escapement was 3 crore. And same assessee, Mr. X, same assessment here. Where is the application of mine? So that becomes my second ground on this. So now coming back to our discussion on 148A. Yeah, coming back to 148A now. They say that the assessing officer shall. So the first thing we discussed is that the gentleman has to be the assessing officer, which we concluded. The assessing officer shall, before issuing any notice under section 148, conduct any inquiry if required. Now I would come to this phrase if required later, because the Honorable Supreme Court has given one comment on this. I'll come to that little later. He shall conduct an inquiry with the prior approval of the specified authority. The specified authorities are given in the subsequent sections. We'll deal with them as and when we'll reach there. Specified authority with respect to the information which suggests that income chargeable to taxes escaped and assessment. Now here the word is with respect to the information which suggests that income chargeable to taxes escaped and assessment. Now what he should be having with them is information income chargeable to taxes escaped and assessment, meaning that it should not be a simple plain information. It cannot be a data dump which is available. It has to be an information which indicate that escapement of an income. So unless it can be established that the information results into escapement of income, it indicates at least escapement of an income, one should not say that it is a fit case. But let us assume that assessing officer has got the information. It could be an information about cash deposit. It could be an information about acquisition of a property. It could be an information about the sale of a property. It could be an information about deposits with the bank. So these are the grounds on which we are now getting the notices basically, right? So this is the information that he has received. Now he has to conduct an inquiry. First of all, first step is he has to conduct the inquiry. And that inquiry has to be conducted by the prior approval. Now here my first question to the assessing authority, so yes, I understand that the 148A notice has come. I have replied to that notice. He has passed an order accepting my reply. I have no problems. But he has passed an order against my reply. In that particular case, once again, I am left with 2 alternates. Either I can go to the read before the High Court, or I can participate in the proceedings. When I am participating in the proceedings, obviously for my better safety, or I'm not participating, I'm thinking of going into a read, I would go for an RTI and I would demand this information that as per clause A, you have to conduct an inquiry. So first is what information you have received. Number 2, Have you conducted any inquiry? If yes, have you taken prior approval? Number 2. Number 3, if you have decided not to conduct an inquiry, then on what basis you have decided that you are not going to conduct an inquiry? Right? Because if we go to the memorandum explaining provisions of the Finance Bill 2021, which has come up with this particular new scheme, they have said that the intention is to ensure that litigations can be avoided, litigations can be reduced, and harassment or undue inconvenience caused to a taxpayer can be avoided to the extent possible. The another issue here is, and they have said that we are giving you lots of approvals precisely because we can ensure that no undue notices are being issued. So meaning thereby, memorandum explaining Finance Bill 2021 has made it absolutely clear that this approvals cannot be a mechanical approval. There has to be an absolute application of mind. Meaning thereby, all the judgments available in the past under an old regime which says that satisfied, you just put a stamp saying satisfied, these judgments are not going to work. I mean, sorry, this approvals are not going to work. You can say, you put a stamp saying yes, you put a stamp saying satisfied. You kept the entire format ready and the AO has just written with a pen satisfied, and then you uploaded it and signed it. This all would come to the rescue of the assessee when they would, under an RTI, demand this information, which would help you determining whether you want to go for a rate or not. So conduct an inquiry if required with the prior approval of the specified authority. Number 1. Number 2, provide an opportunity of being heard to the assessee by serving upon him a notice. So now once again, provide an opportunity of being heard to the assessee by serving upon him a notice to show cause within such time as may be specified in the notice, but not less than 7 days. So minimum 7 days time is required to be given. Recently, I was just referring to a judgment very recently, and that judgment is, I would say, of, just give me a minute. Yeah, it is a judgment. 1 minute. Calcutta High Court has said that कि आपको जब 7 दिन का time दिया है, उसके बाद अगर the 7 days time has been given to you, which is followed by weekend, Saturday and Sunday, then you have to understand that the last day is Monday. You cannot simply go and pass the order simply because what has happened is 18th March was, in this particular case, what has happened, for those who want, for your benefit, I'll just give the citation. It is RN Fashion, FASHION, RN Fashion, Tax Sutra 396, HC 2022, Calcutta High Court, and this is the judgment available. And this is of May 25th May 2022. So it's a recent judgment, May 2022. This is the judgment where they have said, and interestingly, here they have passed an order. They have passed an order without application of mine. They said that the 21st March you have filed and reply. The date was 18th March. They said it was 1920 was a public holiday and the reply was given on 21st March. Even as per general processing, the time gets extended here, and they imposed cost on the department. They asked the department to submit a particular amount within 3 days. Why do I share with this? This is how the courts are looking at it. And the first thing is you have to be given a time. Minimum 7 days time should be given, as may be specified in notice, but not less than 7 days, and but not exceeding 30 days from the date on which the notice is issued. So 7 to 30 days time can be issued, or such time as may be extended by him on the basis of an application in this behalf, as to why a notice under 148 should not be issued, and the basis of information which suggests that income chargeable to tax is escaped and assessment. So meaning thereby you have to give a time of minimum 7 days, maximum 30 days. Even if you have given me a time of 30 days, if there is a reasonable cause, I can demand the time. And if the time is demanded by me, if it is for a reasonable cause, that time needs to be provided to me. So the same judgment, Calcutta High Court, is on the similar line. So once again, we can apply this particular judgment, RN Fashion, right? So if I make an application for extension, the time has to be given, and it is a duty to provide the right, provided I should have a reasonable ground. Now, what he should provide me? He should serve me a notice. Along with this notice, he has to also provide me the basis of information which suggests that income chargeable to tax has escaped assessment in this case. So not only the notice, the information should also be provided to me. So this is the first thing that he has to do. Number 2, he has to consider the reply of the assessee furnished, if any, in response to the so cause notice referred to in clause B. So all okay, clause B says that I have to file the reply. Clause C says that I have to file the reply. Number D, decide on the basis of material available on record, including the reply of the assessee, whether or not it is a fit case to issue a notice under 148 by passing an order with the prior approval of the specified authority within 1 month from the end of the month in which the reply referred to in clause C is received by him. Meaning thereby, if I have received the reply in, let's say in April, let's say the time allotted to me was 4th April, he has a time for 1 month from the end of the month in which reply is received. So he has a time till, let's say, 30th of the May 2022, through which he has to file his, through which he has to pass an order. And next is, provided that the provisions of this section shall not apply. Okay. Now the 147 says that it can be done, reassessment can be done, subject to 148 to 143. 148 says that before you proceed, go to 148A. 148 says that conduct inquiry based on information, serve the notice after taking an approval, consider the reply. After considering the reply, you pass the order. Now, I pass the order, you have to go and issue the notice under 148. But now this section contains certain exceptions. They say that the provisions of this section shall not apply in some of the cases, meaning thereby the requirement of going through the 148A will not be applicable, and straightway there will be a notice under 148. When this would be the case, one, a search is initiated under section 132 or the books of the accounts, other documents or assets requisition under 132A in case of an assessee or honor after 1st day of April 2021. If search has been conducted or books of accounts have been requisitioned, in that case, no 148A formality. It will be assumed that income chargeable to tax as escaped in assessment, straight will be taken to 148. The assessing officer is satisfied with the prior approval of the principal commissioner or commissioner that money, bullion, jewelry, or valuable article or things seized in a search case, seized in a search under section 132 or requisition under 132A, as the case may, as the sorry, in the case of the to the assessee, the search has been conducted at the premise, or else they found here what is belonging to me. If that is the case, the prior approval it can be done. Similarly, pertain to me or the information contained therein relates to me, then he can do that. And last is, if the assessing officer has received an information under the scheme notified under 135A pertaining to income chargeable to tax, escape and assessment for any assessment year in case of the assessing. So in those 4 cases, in those 4 situations, he has to bypass the process given under 148. So now having done, so I have now received a notice under 148. The first thing that I mentioned, my first step would be to check whether the AO has got a jurisdiction or not. If he has got the jurisdiction, fair enough. He does not have a jurisdiction, I would challenge that jurisdiction. While challenging this jurisdiction, I would refer that jurisdictional chart based on which I am challenging, and I would demand, please provide this info, please provide the, please determine my correct jurisdiction. And if the case has been transferred to you from my XYZ ward, in that case, please provide the order under 127. That is the first thing which I would be doing. Second thing is, I would see to it that what information has been made available to me. Now, you all have got the notices. In those notices, we are seeing that number of time what has happened, that they are simply provided the information which has come. It says that you have sold 2 immovable properties, value is 1,42 lakhs of rupees. But as a matter of fact, when we look at the sale deed, we come to know that it is only 71 lakhs of rupees. There, it has been triggered twice. Sometimes what has happened that the same property is appearing in 26 years. So he says that 71 lakhs, 71 lakhs, 71 lakhs is 202 crore 13 lakhs. And they say that income escaping assessment is 2 crore 13 lakhs of rupees. Now this precisely indicates that there is lack of inquiry here, and this becomes precisely a case where I can say that you have simply issued a notice without conducting an inquiry. If we look at this intention behind introducing this section, they say that they have given a legal structure to a GK and drive strap. They have made the GK and drive strap into the law. They say that before we proceed with the assessment, we'll give you a so-called notice that why it should not be a case for taking up as a reassessment, and then they should have conducted an inquiry. If they have got an information suggesting that you have got, you have sold an immovable property, they could have very well called for the sale deeds from the sub-registrar. They could have checked that, okay, though the information which has come suggests 2 crore 42 lakhs or 2 crore 13 lakhs, but as a matter of fact, it is the same property which is being reported 71 lakhs into 3. So ideally, income escaping assessment is 71 lakhs. Second part is sometimes what has happened that let's say the property is being acquired jointly by Mr. X and Mr. Y. Total value is let's say 4 crore rupees. Now they say that income escaping assessment is 4 crore. Now how can income escaping an assessment 4 crore when the property is jointly acquired and the share of both the parties is 50%? Maximum income escaping assessment has to be 2 crore rupees. That itself is a ground of non-application of. So it is a dual ground. One, failure to conduct an inquiry, and second is non-application by the authority. And this ground has to be taken. We have got on this, we have got a recent judgment of Honorable Gujarat High Court, and this judgment is why I would say important, not because of my Gujarat High Court, but this judgment is important, ma'am, because this judgment is, I would say, important because it has been authored by Honorable Pardiwala sir, who has now become the judge of Honorable Supreme Court. Now let us read what Honorable Pardiwala sir has to say on this. Now, the language which they use, I'll read for you. The plain reading of clause D of section 148A referred to above would indicate that assessing officer is obliged in law to decide on the basis of material available on record, including the reply of the assessee, whether or not it is a fit case to issue a notice under section 148 by passing an order with the prior approval of the specified authority within 1 month from the end of the month in which the reply is received by him. Thus, now this is important, para number 9, they say that thus, there is an obligation cast upon the assessing officer in accordance with the clause D of section 148A of the Act of the Act 1961 to consider this case not only on the basis of material available on record, but also the reply of the assessee. If the reply of the assessee has not been considered, then passing of the order under clause D of section 148A could be said to be an empty formality. The new regime of section 148A should be strictly followed so as to make it meaningful. So this is the direct judgment. Once again, they have followed this court in the case of the Divya Jyoti Diamonds Private Limited versus Income Tax Officer has occasion to consider section 148 of the Act for the purpose of reopening. We quote the observation, that is okay. So now, considering this, they have said that they have to consider the reply carefully, and after considering the reply, they have to pass the order. Similarly, Allahabad High Court has as well in a very recently has passed an order, and Allahabad High Court has also taken a view that reply filed by the assessor is to be considered. I will give you the citation of this judgment of Gujarat High Court. Just give me a minute. Shrenik Sudhir Bhimawala, that is the case. Shrenik Sudhir Bhimawala. Date of judgment is 2nd May 2022. 2nd May 2022. Shrenik Sudhir Bhimawala, and it is a special civil application number 8256 of 2022. 8256 of 2022. That is the judgment which is available. So the two judgments which we have discussed, when we have discussed of Allahabad High Court, this is the second one which we have spoke about. Similarly, if I can Allahabad High Court has also passed an order. I'll share that with you in a few minutes, where they have taken a view that if the inquiry has not been conducted, or not inquiry, if the reply has not been considered, then once again, the reassessment notices would got quashed. Calcutta High Court has anyway charged the cost on the assessee. So this is what the approach of the court is, which we can see now from the basis of the judgment available. So we have considered 148. Now I'm now going back to 148. 148 formalities we have understood. Now going back to 148. Now let's see what 148 talk about. 148 says that before making the assessment, reassessment, recomputation under section 147 and subject to the provisions of 148A, we have seen that what are the provisions of 148A? The assessing officer shall serve on a notice along with the copy of order passed if required under clause D of section 148A. Now here the word if required is because if you are falling in the exception, then the order copy is not required to be submitted. Requesting him to furnish such period as may be specified in a notice, a return of income or the income of any other person in respect of which he is assessable under the Act during the previous year corresponding to the relevant assessment year in the prescribed form and verified in the prescribed manner. Meaning that we have to file the return of income in the time given. They have said that provided that no notice under this section shall be issued unless there is an information with the assessing officer suggests that income chargeable to tax has escaped an assessment in case of an assessee for the relevant assessment year and the assessing officer has obtained prior approval of the specified authority to issue the notice. So even 148 approval is required to be, a notice approval is required to be taken. Now they have added one more proviso, and that is an amendment made by Finance Act 2022. That they have said that no such approval should be required where the assessing officer with the prior approval of the specified authority has passed the order under clause D of 148A. This is one can probably understand that 148A D may you have passed an order taking a prior approval and now once again you are issuing a notice. That this is a double duplication of the effort which is not to be done. So that is the precise reason they have said that if you already passed an order under 148 clause D with taking an approval, then again approval is not required here. Now explanation 1, they say that for the purpose of this section and section 148A, the information with the assessing officer which suggests that income chargeable to tax assessment means. Now what do we mean by that information and when can we say that information chargeable to tax has escaped an assessment? Now they have defined it over here, so they cannot move from here. They are saying that A, the information in the information in case of an assessee for the relevant assessment year in accordance with the risk management strategy formulated by board from time to time. Now understand the point. Here they have said that the information in case of an assessee is coming from the board in accordance with the risk for income in accordance with the risk management strategy. Now, though there is an information coming in that cash has been deposited, though there is an information coming in, assets have been acquired, but does that indicate income chargeable to tax is escaped an assessment, or does that indicate escapement of income? I might have filed return of income disclosing, let's say, 10 lakhs rupees as my income, and there's a cash deposit of 30 lakhs of rupees. This is an information, I agree. But then does it anyway indicate? The answer is no. Even the new regime does not permit to carry out reopening for verification purpose. Even the new regime does not permit reassessment for the purpose of, just for making a roving inquiry. Even the new, because this is the reopening and this is the reopening, the power to reopen cannot be given to cure the mistake of the year. It is to be exercised only in a critical situation. It is to be exercised only in an extreme situation. They cannot make him use it normally. They can do for verification 143 2 crore, no issue. Now you have the information. Now here also there is a question for us. When did you get this information? If you got this information by the due date of filing, by the due date of issuing note 143 2 notice, and you chose to sit on the information, now you are issuing a notice, then you have missed the train of 143 2 and now you want to catch 147 train, then this is not possible. You had the information, you chose not to take the matter for a scrutiny. Now you are choosing a matter for a scrutiny. Once again, this is not allowed. So this can also be a possible argument so far as 147 is concerned. Any information in case of an assessee in the relevant assessment year in accordance with the risk management strategy. Any audit objection. Formally, they have said that the audit objection of C&AG report. Now they have omitted the word C&AG. Any audit objection to the effect that the assessee in the case of the assessee for the relevant assessment year has been made in accordance with the provisions of the Act. Any audit objection to the effect that assessment in case of an assessee for the relevant assessment year has not been made in accordance with the provisions of that. Now understand, this is once again, this is slightly crucial here, ma'am. Here they have said that any audit objection to the effect that assessment. Now here audit objection not necessarily that income escaping an assessment. Here they say that if you have made an assessment which is not according to the provisions of that, then also reopening is permitted. Now let us differentiate this. let us say that, to give you an example, I have filed my return of income and I have said that I have filed my return of income. I have offered that I have offered 1 crore rupee as short-term capital gain on sale of the shares. Now, ideally, last year and consistently, I am offering this 1 crore. I am offering the income from the sale of the shares as my business income. This year, I have offered them as, I would say as short-term capital gain. Now, I have offered the income to tax. It is not that the income has not been escaping assessment, but ideally it should have been taxed. As a business income and not as a capital gain, right? So the assessment has not been made in accordance with the provision of the law. So if there is an audit objection that the assessment has not been made in accordance with the provision of the law, once again, this can be a ground for reopening. It indicates that income chargeable to tax has escaped an assessment. Till now, we have got series of judgment where a view has been taken that reopening is not permissible on the basis of an audit objection because it is a change of opinion, right? So, but now this judgments, this judicial rulings have been turned out. They have turned down those rulings by coming up with this, that if we can give you another example as well. There is a short-term capital gain, 1 crore rupee. I should have been, long-term capital gain, 1 crore rupee. I should have paid. I have sold those particular shares off market. Listed shares, but I have sold off market. Your tax treatment is different. I have sold on the stock exchange. Tax treatment is different. Income has been offered to tax, but the tax treatment is different. Assessment has not been made in accordance with the provisions of the law. So this is a ground for the purpose of carrying out reopening. 3. Any information received under an agreement referred to in 90 or 90, so any under double tax avoidance agreement, if you have received any information, you can go ahead. Any information made available to the assessing officer under the scheme notified under 135A, and any information which requires action in consequence of an order of a tribunal or a court. So if any information is coming from this angles, it results into, you can say that it results into an information, it constitutes an information indicating escapement of an income, where they can issue a notice under section 148A, 148, sorry, they can issue notice under 148. Now explanation 2, for the purpose of this section. Now here they have given 4 such circumstances. 1, 2, 3, and 4. These are the 4 cases. What is to be done? They have said that in 4 cases where assessing officer shall be deemed to have information which suggests that income chargeable to tax has escaped an assessment in case of the assessee, where search is initiated or books of the accounts have been documents or other such requisition or surveys conducted in the case of the assessee, or money, bullion, jewelry, or other valuable article or thing, books of the accounts or documents are seized or requisitioned in case of any other person. So yahan pe unhone, at this level they have said that in those 4 circumstances, it would be presumed that the AO shall have the information escaping the assessment. What are those 4 cases? Search is conducted under 132. If the search has been conducted, AO shall have the information. If the search is conducted 132, or the books of the accounts or other documents of the assets are requisitioned under 132A, on or after the 1st day of April 2022, in case of an assessee, if search has been conducted at my place, AO shall be deemed to have the information. AO shall deem to have the information that income is chargeable to tax assessment. He can go to 148 straight away. I mean, it would be an indication income chargeable to tax assessment, even though the case doesn't fall in the above 4 category. So he can go and issue. Now we are aware that 148A is also an exception to this. So 148A has been removed. Number 1. A survey conducted under 133A other than the subsection 2A. Now look at the situation. This was not there under 148A. When we are referring, this option was not there. So if you are following here, yes, it would be treated as if you have got information indicating escapement of an income, but you have to follow the process of 148A. You cannot straight away come here. And the 3rd and 4th are common, so I am not going into it. So with this, we are done with 148 as well. So first is 148 to 153. 148 mein ja sakte ho, if you can go by 148A. 148A we have dealt with, 148 deal. Now coming to 147, then I'll go to 149. And when I'll be going to 149, now we will be discussing the Honorable Supreme Court decision on the issue. I hope, man, everyone is with me and things are going fine.
Yes, sir.
Yeah, okay. So now going to 147, of course, now then I'll take you to 149, which talks about the issues and where the entire Supreme Court discussion and the judgment and the controversy started. Then we'll go to that. But then now let's go to 147. Yeah. Now 147, they say that if income chargeable to tax in case of an assessee has escaped an assessment for the assessment year, the assessing officer subject to 148 to 153. 148 we have dealt with, 148A we have 148 say 148A. So we have dealt with that. Assess or reassess such income or recompute the loss or depreciation allowance or any other allowance or deduction for such assessment year, right? Now this is important. If you go to the old section, ma'am, now this is important what they have covered. Even here they have rectified their one mistake which was there in the old section. If you refer the older section, they say that if assessing officer has a reason to believe that income chargeable to tax and escaped an assessment, then he may, subject to the provisions of 148 to 153, assess or reassess such income and also assess or reassess such other income which comes to his notice. The word used was also. Based on that, the view was taken that if there is no addition on the main ground on which the case was taken up, then there cannot be any addition on the other grounds. And for this, we have direct judgment of Jet Airways. We have got the direct judgment of Jet Airways, Bombay High Court, Mohammad Junaid Dadani, Gujarat High Court, Renbexi, Delhi High Court. Even we have got Rajasthan High Court on that. So we have got series of judgment on this, which takes a view that if the addition has been made on one issue, for if the case has been taken up for one issue, let's say the case has been taken up for verifying, or case has been taken up with respect to the capital gain on sale of an agricultural land. And now you are making an addition with respect to cash deposited in bank. No addition with respect to capital gain. Then whatever addition which you have made with respect to cash deposit, that would fail. I completely agree that now this ground will not be available, but those proceedings which are going on as on date before the appellate authorities, where the orders have been passed by 31st March 2021 under the old regime, still, if somebody has a matter, we can apply this. Now, they have removed the word and also, meaning that this issue has now been taken care of, even if no addition has been made with respect to the issue for which the case has been reopened, they can now go ahead and they can make an addition for the other issues which they come to the notice, and for that they are not supposed to follow the process given under section 148. They further say that for the purpose of this assessment, reassessment under this section, the assessing officer may assess or reassess income in respect of any issue which is escaped assessment, and such issue comes to the notice subsequently in case of an proceedings under this section, irrespective of the fact that the provision of 148A has not been complied with. So this is what they are saying, that if they are coming up with an issue and the 148 has not been complied with, they can do. In the past, if you refer the old section, they have said that if the matter is subject matter of appeal, they cannot be discussed. Now, let's take an example. If ITR-U claim has been made, now that is subject matter of an appeal. Now, ITR-U has got various conditions. It is subject matter of appeal with respect to one of the aspects. Now, the entire aspect cannot be disturbed. Now, they have said that if it is on any issue, they can go ahead. So, even that lacuna has been cured over here. So here they have made, ensured that those judicial rulings which are going against the assessors, they have been taken care of. So with this, we are done with 147, 148 and 148A. So now going to 149, and then we'll travel back to the Supreme Court judgment. Now, this is important. And why I would say this is important, because when we are answering to the notices issued under 148A, here I'll have to take some recourse over here. No notice under 148 shall be issued for the relevant assessment year if 3 years have been escaped from the end of the relevant assessment year, unless this court case falls under clause B, meaning thereby ultimately the limit is up to 3 years. I cannot issue a notice beyond 3 years. Now, the first question that comes here is, if the notice today is coming to me under 148A, for how many years a notice can be issued? 3 years. Meaning thereby, this is, if today a notice is coming under 148, I would say, it's a 31st March 2022, major notice, I mean, those years, whatever notices that has come, 3 years from the end of the assessment. So if I say AY 18, 17, 18, 3 years from the end of the assessment year, 18, 19, 19, 20, 20, 21, 31st March 21 ends. AY 18, 19, if I say, then 3 years from the end of the assessment year is 19, 20, 20, 21, 21, 22. So AY 18, 19 was the last year for which a notices can be issued. The notices, that's the last year, AY 18, 19, for which you can issue notice by 31st March 2022. For AY 18, 19, I cannot issue notice post 1/4/2022 if my case falls in the second category. Now, here comes a question. Even post ruling of Honorable Supreme Court judgment, that remains a controversy. Ma'am, if I talk about AY 1718, then 3 years ends 31st March 21, right? Then there is a TOLA through which the time extended to 30th April 2021. Then once again, a time extended to 30th June 2021. So now, of course, notice issued post 30th June 2021. I agree that they cannot be issued for AY 1718 because it anyway goes beyond 3 years, assuming my case is not falling in the second category. Right now, the concern is that for 1718, can my reopening is permitted? I mean, up to 31st March 21, it is permitted. Now, can this reopening be permitted for you can say on 1st April 2021? Is that permissible? That is the first issue which we have to discuss. First, we'll deal with the Supreme Court judgment, then we'll come to that. Even if you go to AY 1617, the 3 years ends on what date? 31st March 2020. The TOLA extended to 31st March 21, further extended to 30th April 21, further extended to 30th June 21. Now, can this extension of TOLA be applicable for even AY 1617? That is another issue that needs to be discussed. What the Honorable Supreme Court has said on this. So I'll come to this after discussing Honorable Supreme Court decision. That's why I kept it pending. I'll discuss it right out. I will discuss post. I'll discuss 149. As of now, forget about Supreme Court decision for a time being. I can say that forget about COVID, forget about TOLA, forget about the extension. If we will go to the Casata a little later, let's have the vanilla first. If we talk about this vanilla, then up to AY 1819 notices can be issued by 31st March 22. Beyond AY 18, if AY 1819 and past years cannot be disturbed after 1/4/2022 unless you demonstrate that case falls in category 2, category B. Ma'am, I guess this is clear. Everyone is with me, right, ma'am? So it is fine, right?
Yes.
Okay. Yeah. So now coming to clause B, if 3 years has 3 years, if 3 years but not more than 10 years, 3 to 10 years gap they have given a window of 3 to 10 years, but have elapsed from the end of the relevant assessment year. Now, since you are above 3 but within 10, now the condition. Unless the assessing officer, these are the keyword, unless the assessing officer has in his possession, books of accounts or other document or evidence which reveal that income chargeable to tax represented in the form of asset expenditure. I'll come to that in a little while. The first question here, the first point that needs to be considered here, madam, is you can go beyond 10, 3 up to 10, but you should have, unless the assessing officer has in his possession books of accounts or a document or evidence which reveal that income chargeable to tax has escaped an assessment. I'm sorry. Ma'am, I hope you got those wordings. You got these wordings because these wordings are very categorical. They don't say that you have reason to believe. They don't say that you have information indicating escapement of income. They are very clear. If assessing officer in his possession has books of account, you should have books of account. Now recollect it with AY 1314 notices which you are getting now. 148 notice which are deemed as 148 notice and you have been supplied the information. You should have what? Books of account. Okay, if you don't have books of account, I'm fine. Other document or evidence, man, mark those words, evidence. The document should be those which can be treated as an evidence and it should be an assessment. So it cannot be a reason to believe. Even it is, the scope has been narrowed down. They have said that even it cannot be reason to believe. In the past, various high courts have taken a call that sufficiency of the reasons is not to be considered at the time of the reopening. There should be reason. Sufficiency is not to be checked. Now, nothing. Up to 3 years, you want to apply, you may apply this ratio. I don't have a problem. But then in clause B, 3 to 10 years, you should have direct document, books of account, evidence which reveal that income chargeable to tax has escaped an assessment or income chargeable to tax is represented in the form of an asset. Now, once again, there comes a question which I'll come in a little while. In the Finance Act 2021, they have used the word asset. Now they have realized that not necessarily it can be income represented, income escaping assessment can represent the form of an asset. I might have incurred a marriage expense and I have incurred the expenditure in cash. It is income representing an income escaping assessment, but not represented in the form of an asset. It is represented in the form of an expenditure. What is to be done? Reopening is not permitted. Reopening is definitely permitted. They made an amendment. Now the question that comes, ma'am, here is that today, if you are issuing notice that you carried out a marriage and your marriage, the marriage was solemnized and the expenditure income was 1 crore rupee, and we have got the information revealing that income as escaping an assessment, and which is represented in the form of expenditure. Today, if you are issuing 40 times, assuming you are satisfying the other condition, I am fine that. Last April to 30th June ke beech mein, whatever notices that you have issued, can you say that this notice is, this notices, they say that now it is represented in the form of an asset. Would it be a valid one? Represented in the form of an expenditure. Would it be a valid? The answer to my mind is strictly no, because the law which was applicable on the date on issue of the notice, that would be applicable. Now this law has come by Finance Act 2022. If I talk about this two amendment, expenditure in respect of a transaction in relation to an event or occasion or an entry or entries in the books of the account, improper accounting entry. So this was not there. Now it has come. So whatever notices you are issuing now, this would be okay. Otherwise not. Now coming to the proviso, provided that no notice under 148 shall be issued at any time in case of a relevant assessment year, beginning on or before the 1st day of April 2021, if a notice under 148, 153A, 153C could not have been issued at the time of an account of being beyond the time limit specified in the provisions of clause B of 1 of section 153A or 153C, as the case may be, as they should immediately before the commencement of the Finance Act 21. Now, what does this proviso say? This proviso says that the limit is 3 to 10, but then you cannot go beyond 6 if it is not permissible in the old law. So, 10 साल का gap available होगा 5-6 साल के बाद होगा. This gap you will be having after 5-6 years, not before that. Right now, you have gap of up to 6 years only. Now, coming to this situation, AY 1314. AY 1314 notices can be issued only up to 6 years from the end of the assessment year. AY 1314 notice be issued only up to 6 years. Now, that is 6 years is 31st March 2020. You cannot issue notice. So AY 1314, 6 years, 31st March 2020. AY 1415, 6 years, 31st March 2021. Now they said that now what has happened is, they have extended the time limit by TOLA of AY 1314. Understand the point. AY 1314. If I now go to the old law, the last date was 31st March 20. Right? If I go to 31st March 20, the new regime was not there. The old regime was there. Now we know that on 22nd of March, there was a Janta curfew, and then it was followed by a 21st days lockdown. And then there came an ordinance. They said that the time limit got extended from 31st March 2020 to 31st December 2020. Then it was got extended to 30th April 2021. So now up to 31st March 21, I understand AY 1314 notice issued 31st March 20 extended to 30th April, but then I'm coming to 31st March 21. That I have no problem, because you have validly extended, you had the power, you extended up to 31st March 21, we have no problems. We are okay with this. Now, you are saying that the notification is up to 30th April. So, whatever notice you have issued on 1st April 21, that notice you have issued under 148. The issue before the court was on 1421, there was no 148. Old 147 is given a go by. New 147 is in the system. You have to do 148-day process. You cannot issue notice on 1/4/2021 under the old law. That is what the situation is. So April got extended to June. So that was a matter of challenge, that April to June notices cannot be issued. In April to June, you cannot issue notice for AY 1314 because those 6 years have gone past, or all the notices have been issued under 148 post 1/4/2021. They are bad in law, because you cannot issue notice under 140, old 140, you have to issue under a new law. And we are aware, so many high courts have passed an order in favor of the assessee. Now, this has resulted into this entire issue. And now this is the Honorable High Courts have passed an order. Once Honorable High Court has passed an order, the matter, the Allahabad High Court being of course, Chhattisgarh High Court has passed an order against Allahabad is in favor, Rajasthan is in favor, Bombay High Court is in favor. So many high courts have passed an order. They have challenged the Allahabad High Court matter order before the Honorable Supreme Court. Now, Allahabad High Court order has been challenged before the Supreme Court, and now Article 142 was applied by the Honorable Supreme Court of India. Justice M.R. Shah, the author of the judgment, has applied Article 142, and they have said that this judgment is applicable pan-India, meaning thereby all the 90,000 notices now coming to that particular judgment. So now, on 4th May 2000, so I guess my screen is shared, and is you can see that reassessment under new regime.
Yes, sir. Yes, sir.
Okay. Now this Allahabad High Court matter was challenged. What has happened is the department said that we have issued 90,000 notices and there were 9,000 reads. The department, the Honorable Supreme Court says we don't want to deal with the 90,000 notices, 9,000 reads. We are simply, we are applying this judgment, making this judgment applicable pan-India by introducing applying Article 142. We are not commenting on whether Article 142 could have been applied or not. We are not commenting what exactly Article 142. Let us say that this judgment has now been made applicable. This judgment has been now made applicable pan-India. The Supreme Court relying on applied 142, and then interesting is paragraph 8 of the Honorable Supreme Court. What is held in the paragraph 8? This is important. Now, paragraph 8 of the order of the Supreme Court, they say that it is true that due to a bona fide mistake, these are the exact words of the judgment. It is true that due to the bona fide mistake and in view of the subsequent extension of the time-wide notifications, the revenue issued impugned notices under 148 after amendment, and after amendment was enforced with effect from 1/4/2021 under the unamended section 148. In our view, the same ought not to have been issued under the unamended act and ought to have been issued under the substituted provision under 147 to 151 of the ITR as per the Finance Act 2021. Mark this highlighted para. Here the Honorable Supreme Court has categorically agreed with the finding of various high courts saying that they should have not have issued, meaning thereby whatever extension which has been granted by TOLA, that is, in that particular extension, that is not applicable to a new regime. The notice is 148A. You cannot say that 31st March 20 got extended to 31st March 21, and then it got extended to 30th June 21. So the extension of TOLA cannot be given to 142/20, the new 148A, because it was never there on the statute. This is not applied. Supreme Court has impliedly said this. Thus, the Supreme Court has clearly recorded the finding that there was a mistake on the part of the revenue for applying the extended time limit as per the various notification, as the revenue issued the impugned notices under 148 after the amendment and enforced with effect from 1st April 21. This cannot be done. Now look at this. In view of this, we can say clearly that for AY 13-14, if 148A notices issued or 148 notice issued after 1/4/2021 for AY 13-14 is bad in law even after this judgment. AY 14-15, 6 months, 6 years from the end of the assessment year, ends on 31st March 21. So even for AY 14-15, notices issued are bad in law, they cannot be issued. Now coming to AY, post 1/4/2021, they cannot be issued. Now coming to AY 16-17, 6 years from the end of the assessment year, they end on 31st March 2023. Correct. You can issue a notice if your case falls under category B 149, under B if that falls. What is the condition? You have the books of accounts, documents, or evidence revealing escapement of income. So if you have this, you can issue for 16-17, and income escaping assessment is more than 50 lakh. There is a cap of 50 lakh rupees, so that 50 lakh cap is there. Then for 16-17, you can do. AY 17-18, it falls beyond 3 years. 19, 20, 21. So it falls beyond 3 years. It can be done only if you fall in clause B. 18-19, it falls beyond 3 years. It can be done only if these conditions are met. Meaning thereby, whenever we have got the notice, now we are getting notices saying that we have to file a reply 148 notice has to be treated as 148A notice. So this is the first issue which I wanted to discuss. CBDT circular has said that AY 1314, the extended time limit of TOLA would be available. That's what the circular has taken a call. CBDT has taken a call. To my mind, this circular, though they have taken a call, but then this paragraph of the Honorable Supreme Court decision has been completely misconceived by probably by the department, and this may result in further appeals and debates where a strict view can be taken, because in the order, Honorable Supreme Court has said that all the defenses available under 149 would be available. So the defense available under 149 is that no notice can be issued 3 to 10 years. So this is to be taken. This has to be kept in mind. Another point here I wanted to discuss is they have mentioned a word that it was a bona fide mistake. Sir, this is an important word here, bona fide mistake. They have tried to strike a balance between the revenue and the exchequer and the assesses. That's okay. They have said that it is a bona fide mistake, meaning thereby if at all there is it is an observation of a Supreme Court that bona fide mistake has to be pardoned. This is what a view can be taken. When you are incurring a mistake, committing a mistake which is treated as a bona fide, then you should not be prejudiced. Meaning that by all my penalty notices, when I can prove that it is my bona fide mistake, in that case the assessee cannot be visited with the penal consequences. Meaning thereby, let's say there is an issue. On that particular issue, assessee has taken an expert opinion about the taxability, about the allowability of an expenditure, about the tax treatment. He has taken an expert opinion. Now he has taken an expert opinion. Based on an expert opinion, he has proceeded based on the expert opinion, and finally, due to any reason, the judicial authorities are not convinced with the opinion. Finally, the additions or disallowances are paid. Can there be a penalty proceedings? We can say that now, if number A, there was no bona fide mistake, there was no mistake at all because assessee has taken a due care. But then if at all it is taken as a mistake, he has acted based on an opinion of a chartered accountant who is considered as the expert in the field. So he has taken an expert opinion. How can assessee now visit it with the penal consequences? So this line can strictly be applied in all the cases where there is a bona fide mistake. And we come across number of cases. I came across a case, ma'am. What has happened in that case is the assessee is claiming a relief. Now, we all are aware that a chartered accountant, the gentleman was at a very senior position. His return is going to be filed by a chartered accountant. He has submitted all the details. Now, by mistake, there was a error in looking at a line, and whatever amount was claimed as a relief was taken as a net income. So there was slight switching of a line. So that committed an error. So there was no malified intention. We referred this issue in our assessment that said, okay, it is our bona fide mistake. We are paying a tax. Now they have come up with a penalty. Now this is considered as a bona fide mistake. And when there is a bona fide mistake, no penal consequences should be there because you already pardoned for 90,000 cases. My mistake is a very small mistake. So this is what a call can be taken. So now what Honorable Supreme Court has now held. Now Honorable Supreme Court has said that the impugned notices under 148, the impugned section 148 notices issued to the respective assessees which were issued under unamended section 148 and that were the subject matter of writ petitions before the various high courts and courts shall be deemed to have been issued under 148A. So first thing they have said that these notices are to be treated as 148A notices. We have no problems to that, but then once again, as I mentioned, AY 13, 14, 14, 15 notices still cannot be issued. That is okay. The requirement of conducting an inquiry if required with the prior approval of a specified authority under 148A clause A is hereby dispensable up to one-time information after approval. That inquiry is to be not to be done. For this matter, we are permitting, you are going ahead. Today morning, I had a discussion on this issue with one of the chartered accountants. He called me up and he said that, boss, I have got a notice for AY 1617. I said, okay. He said that I have got a notice for AY 1617 and then there was no notice available under 148. He has not issued any notice under 148 from 1 April to 30th June. Now what is to be done? I said, see, there is no judgment available. Forget about judgment. For AY 1617, 6 years ends on 31st March 23. Notice can be issued to you. There is no problem. A notice can be issued. Your case should be falling in clause B. Number 2. Number three, this judgment will not be applicable to this notice. Meaning thereby, if a notice has been issued without you can say without conducting any inquiry as mandated by clause A, which we have defined in 148A clause A, you have to conduct an inquiry if required. Without conducting an inquiry, if you are doing without conducting any inquiry, without conducting an inquiry, if the notice has been issued, then it would be failed, because this line is applicable for those notices which are erroneously issued under issued between 1st April to 30th June. If you are not been issued any notice from 1st April to 30th June for AY 1617, and now the notice comes for AY 1617, in that particular circumstances, please note that you have to comply with that particular requirement. So this leeway, this relaxation is applicable for only those notices which have been issued from 1st April to 30th of June. Even otherwise, as observed herein above, holding any inquiry with the prior approval is required. That is what we have discussed. The AO shall thereafter pass an order in terms of 148D in respect of such of the concerned assesses. So here they have to pass an order, but they have to give a time of 30 days. So 30 days clear time is required to be given, and that's why we are getting notices now giving us the time of 30 days. Within 30 days, we have to file the order. Supreme Court has said that you are giving a 30 days time, but then if assessor requires, you have to give a more time, you have to extend the time. So by doing this, Supreme Court has categorically made it clear that do not restrict the time to 30 days. If in a reasonable case, time is required to be extended, you may please extend the time. So whatever proviso was saying, the third proviso to 149, which permits the time extension and the consequences. So here, once again, a welcome amendment, or not amendment, welcome remark by the Honorable Supreme Court. Now, they have said that all the defenses available to the assessee, all the defenses available to the assessee, including those available under section 149 of the Act, they are available. Now, mark these words, all the defenses which may be available, including those available under 149, meaning thereby not only the defenses of 149, all the other defenses are also available. Now, my concern here is, so many writs have been filed. I have received a notice under 148. I'm talking about 1st April to 30th June. I have received a notice under 148 to 30th June. Now I said that I am filing a writ. I have taken so many grounds. I have taken, let's say, a ground. The gentleman is not my assessing officer because it is not a jurisdictional notice, jurisdictional defect. Correct. I have taken a ground that I have taken a ground. Let's say that it is the reopening is for the purpose of change of opinion, and reopening is not for the purpose of reopening is for the purpose of change of opinion, or reopening is, let's say, for the purpose of just making a fishing inquiry. These all are the grounds. And I also taken a ground that the notice is issued after 1/4/21, so it will not work. Now the court has passed an order saying that all these writs would fail. All the courts have now started following accordingly. Now the question that really arises is, what would be the situation? What would be the situation if I have got other grounds as well? Can I go and file the writ again? I hope my question is getting clear. Can I go? Now I'm saying that my AO is not the jurisdictional AO. Can I go and file writ on this for the same year for which now the Supreme Court order has come? Ideally, there should have been some guidance. Luckily, Gujarat High Court Justice Pardiwala has, by passing an order, have said that if assessee has got some other reasons, then on case-to-case basis, a writ can be filed. So this is once again Justice Honorable Pardiwala has, it's a wonderful statement that he has made, wonderful remark that he has given. Certainly, it is a decision of a Gujarat High Court, but then definitely it can be applied, and this gives a clear indication that if you have some other reasons on those notice, the AO was not by assessing officer, the reasons were wrong, right? There is no non-application of mind by the assessing officer. All these are the grounds. If you have those grounds, then on that ground as well, a notice is 148 can be done. Now, another issue. Whatever issues I'm talking about, I have given those issues one by one in the detailed note. So I'll be sharing this note with you, ma'am. Right. So I'm not once again not discussing those issues because we have already covered those issues in the deliberation part itself. Because thereafter we are also supposed to travel to the updated written as well. Right. So I'll share this PDF itself. So those contents, whatever I have spoken, is completely mentioned here only. Now, another issue, ma'am, that comes to the notice is that, let's say 1/4/2022 notice has come, 21 the notice has come. I have filed a writ, it is decided by a court in my favor. Supreme Court turned down, I understand that. So that goes against me. I have filed the writ. Honorable High Court has not even decided. I understand that even that has decided against me because the judgment is applicable pan-India. I have received 142 notices, 148 notice post 1/4/2021. I have decided not to file a writ and I thought that I will be participating in the assessment. Now two probabilities. Probability number one, my assessment order is passed. Probability number two, my assessment order has not been passed yet. So we understand there are four possibilities, ma'am. Sir, you are following me, right? There are four probabilities, right? 148 notice has come on 148 notice from 1st April 21 to 30 June 2021, on which I have filed a writ, for which, and my High Court has decided the issue in my favor. Supreme Court says that this is now going to be 148 notices, that train would start again. I have decided not to file a writ. I have filed a writ, but my High Court has not decided the issue. Still, the Supreme Court judgment is applicable pan-India, the train would start again. 3, I have decided not to file a writ. And I have decided to participate in the proceeding. Proceedings started, yes, passed an order. 4th, the proceeding is going on, no order has been passed. What is to be done? So far as proceedings are going on and order has not been passed, he has to once again issue a notice under 148A. He has to issue that notice 148A. He has to provide the information to me. And I have to file a written and the things would start. I understand that. But so far as the order has been passed, there are rare chances where by 31st March 22 they would have passed an order because they all were busy with the other notices, and these notices were barring by time on 31st March 2023. They should not have passed the order. But let us say they have passed the order. If they have passed the order, then we can say that the notice under 148 was bad in law because it has been accepted by the Honorable Supreme Court in the paragraph number 8. When the notice itself is bad, order pass is going to be bad in law. Now they cannot come and issue the notice under 148A. This is what is my understanding over the issue. So with this, I am concluding 147 to 153 discussion. I am concluding the reopening wala discussion, ma'am, here. If any member has a question on reopening, we can deal with that. Otherwise, we can start with the next agenda, which is updated written. Ma'am, over to you.
1 second, sir.
Any members, any query on 147, 148, 149?
Sir, are you able to view the chat box?
Sure, ma'am. Sorry, you are asking
there are
me.
few questions in that, sir.
1 minute, ma'am.
Chat box.
No, I cannot see any question here. If somebody can help me out, I'm sorry.
Yeah, 1 second. So have you got any messages? Can you check the chat box now, sir?
Sorry, my screen does not reflect any question as a matter of fact. I don't know.
The first question is section 148A, whether conducting inquiry is discretionary on the part of the AO, since the words are used if required.
Yes.
This is the first question.
Yeah. So originally, when I was referring 148, I mean, before this judgment, I was of the opinion, yes, it is mandatory. But then in this Supreme Court order, if I can just take down the order, just give me a minute. If I can just, I need to check, just the order is in front of me. So, yeah, the order is with me. Just give me a minute. I'll take you to one of the paragraph. And then in that particular paragraph, they have done something which they should ideally better not done. Just give me a minute.
Sir, sorry for intervening between you, sir. Members are requested to put your query and mark it as a read to everyone so that everyone can see the question.
Yes, sir.
Don't post the question only to the host or co-host so that even the speaker is not able to see.
Okay.
Thank you, sir.
So this is the first question.
Just.
Now it's coming.
No, I'm just pasting it and sending it to
Fine,
everyone.
madam. Fine.
Okay, I'll just do.
Jignesh, can you able to see the question?
Just give me a second.
Yeah, sure.
So these are the questions that we received.
The questions can be visible. I was just actually finding out that judgment basically just got
Fine.
now. If we go to para 6.4 of the judgment, they say that just allow me to share my screen. Just give me a minute. Yeah. If I go to this, however, by 148A, the procedure has now been streamlined and simplified. It provides that before issuing any notice under section 148, the assessing officer shall conduct any inquiry if required. Now they have highlighted it, they have made it bold. They precisely mean that it is now not mandatory to conduct that particular inquiry. It would be a discretion, but then basically this discretion, even if the discretion, that's why when I started with 148, I said that, have you conducted any inquiry? Yes. 2, if you have not conducted an inquiry, what are the basis why you applied that particular discretion? That this discretion has to be applied. He says that I don't have a time, that cannot be a discretion. He says that this is clearly visible that the income escaping assessment is this. This is not the ground. He should have applied his discretion in the interest of the justice to ensure that why inquiry has not been conducted. Not conducting an inquiry because lack of time, not conducting an inquiry because there is heavy workload, not conducting an inquiry because he has to issue a certain notices. That should not be a case. Because if we look at the intention behind introducing the new scheme is to ensure that the litigation can be avoided. And before a notice is issued, necessary inquiries have been done. So let us take an example. If he is getting an information that you have not filed a return of income and you have sold an immovable property and the value is 50 lakhs of rupees where your share is 50%, so it's a 25 lakhs of rupees, his income is escaping an assessment. One can say that, okay, he has not conducted any inquiry, he has taken that approval, that needs also to be approved. Because if you are conducting an inquiry, you have to take an approval from a higher authority. Now, if you don't want to take an inquiry, you are not going to take an approval. That cannot be the intention. So even if you are not conducting an inquiry, you have to take an approval, according to me. So they have said that, boss, you do this, but then you take an approval of the higher authority. Conducting an inquiry, take the approval. Not conducting an inquiry, take the approval. So whenever he prepares a proposal saying that I have gone through the information coming to me, according to the two owners, the property is 25 lakhs of rupees, the assessee has not filed the return of income. So it is a case, the feed case where the information indicates escapement of an income, and I propose not to conduct further inquiry and statement seek a permission to issue a notice, and that approval is granted. That is okay. So it is not that if you want to conduct an inquiry, take an approval. Don't conduct an inquiry. If you don't want to conduct an inquiry, okay, you go ahead, it is a discretion, no need to come to me. That cannot be the situation. And there's one more paragraph I was just Oh, shoot. Yeah. Sorry, I missed that. Even otherwise, as observed here and above, holding any inquiry with the prior approval of specified authority is not mandatory, but it is for the concerned assessing officer to hold any inquiry if required. Now, this paragraph of the judgment. Now, ideally, this line has probably led towards this issue. That's why I said that if required, bold there was a bold, and now they have made this paragraph, and this paragraph they have used this point number 3 and para 10. So para 10, subpoint number 3, they have made this point. They say that even otherwise, as observed here and above, holding an inquiry with the prior approval of the specified authority is not mandatory. So they say that you are not conducting an inquiry, it is okay, it is your discretion. But my take is, even if you are not conducting, that should also be backed by an approval. It cannot be absolute discretion that, okay, you want to conduct an inquiry, go and take an approval. If you don't want to conduct an inquiry, it's okay, it's your discretion. Okay. That is beyond the logic. That is one of my points. So yes, the answer is conducting an inquiry is mandatory. I mean, no, it is not mandatory. Discretion, but then discretion has to be backed by an approval. We can expect a ruling on this line. Yeah. So going to
next question.
Yeah.
148A, whether nature of inquiry is subject to RTI.
Certainly, yes. You are conducting an inquiry against me. What inquiry you have conducted? I can certainly ask the information. I can definitely get an information under RTI. Of course, yes.
Next one, whether the date of service and receipt of notice are to be reckoned for the minimum allowable period of 7 days.
So basically, the word used are the notice is required to be served. Now the notice is considered to have been served to be the moment the notice is coming to my mailbox. Right? We have a judgment that the notices are considered as issued the moment it is sent from their mailbox. That they are considered to have come to me the moment they are coming to my mailbox. The moment the notice has come to my mailbox, yes, it has been received by me, and then I can proceed further. So those 7 days have to be taken that way only.
Okay. Next one, whether
whether approval from the specified authority can be obtained in advance during minimum 7 days period. I am not getting the question. If the gentleman can unmute and
he can. Maybe he's inquiring about the prior approval from the commissioner or any higher authority.
No, approval has to be. So what I understand, I repeat, what the gentleman wants to understand is that I have issued a notice giving you a 7 days time. Now can I take an approval? The answer is no. How can you take an approval? Approval is not a mechanical process. You have to prepare a proposal and propose. So the first approval is to be taken before issuing a notice. Right? Whether you want to conduct inquiry, you don't want to conduct inquiry, whatever. Even if you have not conducted an inquiry, prepare a proposal and specify why have you not conducted an inquiry. And that's why there is a check and balance. So that approval is first. Second, you consider my reply. After considering the reply, before you pass an order, go to the higher authority and take the approval. So that should be a second proposal. So 2 proposals, 2 approvals should be there. Number 1, number 2. There cannot be a consolidated approval given by the principal CIT or chief commissioner. The approval should be case specific, separate only. So probably what I understand is that you have issued a notice. Now, meanwhile you are sending me a reply, I'm just going and taking an approval. Reply jo aayega, theek hai. I have taken an approval and I'll say that the information is not. The reply is not accurate and reply is not acceptable. So that is something which is not permitted. Then the entire process fails basically. The entire object fails basically.
Then please explain 149B1, an asset exceeding rupees 50 lakhs.
Yeah, so 149B, they say that if the income escaping an assessment is represented in the form of an asset exceeding 50 lakhs. So if they say that I have deposited a cash, yes, cash balance exceeding 50 lakhs of rupees I have acquired an immovable property. It is in the form of an asset. I have got 50 lakhs of rupees available with me. But then if I say that I have incurred an expenditure of a marriage where I have spent 50 lakhs, let's say that my marriage got solemnized and let's say ma'am conveyed to the income tax authority that Mr. Jignesh has spent, let's say 60 lakhs of rupees on the marriage, and entire amount was spent in cash. But then it is, I agree, it is an income escape. This information, she has given a vital information. It is indicating escapement of an income. It is indicating escapement of an income, but it is not represented in the form of an asset. It is represented in the form of an expenditure. Now here, what I added to this was, let us take an example. Let us take an example. Sorry, let us take here an example that I was issued a notice under 148 on 1/4/2021 that you incurred an expenditure for the marriage 50 lakhs of rupees or 60 lakhs of rupees, which are not recorded in your books of accounts. It is treated as an unexplained expenditure. So we want to, so on that ground, a notice was issued. Now the Supreme Court in the May 22 said that you cannot issue the notice under 148, you issue a 148, and now he is treating that notice under 148A. Probably that notice under 148 may not be valid, may be a valid notice. Let us assume for a time being. Now under 148A, if the notice is issued beyond 3 years and up to 10 years time, my point here is that if that notice is issued now, it has to be represented in the form of an asset. Now it is on that ground, it is invalid notice. Now, the controversy that comes up is that somebody may say the law has been amended, Finance Act 2022 has been amended. They say that now it is not only the form of an asset, even if it is represented by way of an expenditure, even if it is represented by way of a book entry, even that is covered. They say that even that is covered. Now, can this amendment be applicable to a notice issued in the May? That was what I was referring. To my mind, no, because the law applicable was the law which was applicable on the date of issue of notice, that needs to be covered.
Okay, sir.
Yeah.
Para 8 of SC, Supreme Court, the words unamended act is used. What does it mean?
1 minute. Let us go to the para. Just give me a minute.
Yeah.
Let me see. The impugn notices under 148 after the amendment was made under with effect from 1/4/2021 under the unamended section, matlab under the old regime. Purana 148 ka notice tha na, they should have issued 148A notice ideally. But then they have issued 148 notice. So that is what the court has acknowledged. Even after amendment, you have issued the old notice. Had you issued 148A notice, things could have been different. Meaning thereby extension by dollar is not applicable to the Supreme Court.
Okay, sir. So that is all, sir.
All right. So we, yeah, correct. So now we are going ahead with the next issue, that is an updated return. Just give me a second. I'll just transfer one document over a mail so that I can review. Just give me a minute. So here we have a concept of updated return. I'll share this PDF as well with you, ma'am, so that it can be shared for the benefit of the members. So the moment the session ends, I'll share this document. So it would be there with the members, ma'am, for sure. I'll be sharing. Now, basically, we are aware that Indian structure is legal structure is on a developing side. Reason being that if we compare our Indian law with the US law, or if we compare our Indian law with the law of Canada, or maybe the law of the other countries like Australia, the Indian law is being developing law. And so far as something which is good from the other country, we can borrow it from the other country, nothing wrong in it. So if we refer the US taxation laws or the taxation laws of Canada, probably they have the mechanism of, you know, voluntarily disclosing the income which comes to your notice even after filing the return of income. We can see since 2021, the approach is, or not even 2021, even in the past as well, since so many years, the approach of the government is to ensure that the litigations are being reduced. Why do I say so? Because this is what would take me to this particular topic. You cannot file an appeal if the department cannot go to an appeal if the tax effect is below a particular amount to a tribunal. Department cannot go to the High Court if the tax appeal is below a particular amount. What does it indicate? They say that they want to silence the controversies. They want to silence the litigations. That is what the intention is. Thereafter, they have come up with the Vivad Se Vishwas scheme, right? Thereafter, now they are coming up the new reassessment scheme where if you refer the memorandum of explaining provisions of the finance bill, once again, the clear intention is that I can avoid the litigation, or the litigations can be minimized, reduced. The assessor should be having an idea of why his case is taken up for a scrutiny. There should be checks and balances to ensure that. So this entirely on a macro level represents what is the approach of the government. I am not here to appreciate a government. I am not here to comment on the steps taken by the government. But this is what this gives me a macro view of the situation. Now, this updated return is also one of the steps. Now, we all are aware that the last date of filing return is, let's say, 31st of July, 30th of October, 30th of November. And the last date of filing the revised return is 3 months before the, latest by the 3 months before the end of the assessment year, so by 31st of December. If there is no extension. Now, logically speaking, in a transfer pricing case, I get only 1 month time. In an audit case, I get roughly 2 months time. In a regular case, I get only 6 months or 5 months time. Now, my concern precisely here is that the department's concern precisely here is that there might be a situation I may come across, about some income which I might have omitted to disclose in a return. There might be a case that I would have realized some mistake in my balance sheet, which now I want to rectify, and the time limit has gone past. What should I be doing? Should I wait for the assessment? Should I wait for the department to raise the query? Should I wait for the department to, initiate a penalty proceedings? Should I wait for the department to, vest their resources for this? The answer is no. So here, without getting myself involved into any kind of an assessment proceedings, I can go ahead and I can proceed with the I can go ahead and I can proceed with the, my regular business without being disturbed by the revenue authorities. I have omitted a mistake. I have found a mistake I want to rectify. I can go and file the updated return. So that's how they have come up with the concept of updated return. We have got section 139. Within that, they have come up with section 8A, which talks about the updated return concept, which has got the 5 provisos. But they have said that you can do this, but it has to be mandatorily in the favor of the revenue. It cannot be in your favor. So you can do this goody thing are for you. If you have forgotten to claim your refund, I am sorry, you cannot use it. If you are claiming a particular income to be an exempt taxable income, which is a matter of fact an exempt income, I am sorry, you cannot use this. If you are saying that you have forgotten to claim certain amount as an expenditure, you want to use it, I am sorry, you cannot use it. This is not for you. This is for me. This is for you only to the extent that you are being saved from a long drawn assessment proceedings. This is for you only that you are not going to be taken to a remand of the penalty proceedings. So this is what it is. This would save you from being, disturbed by the assessment proceedings and the penal proceedings. That's it. Otherwise, it is for my benefit, not for your benefit. So let me first address the issue which is beyond updated return. Let us take an example. I have filed my return of income. I realized that a particular income is exempt. I paid it. I offered it to tax. What is the way available to me? I cannot go to the updated return concept. What is to be done by me? The first thing which I can do is that once again 143 one intimation has come, I can go and make an application for rectification. If my rectification application gets processed, well and good, no problems. Let us say my rectification application doesn't get processed, I can go for a revision under section 264. That is also a way available to me. I can go to appeal against the order of 154 and then I can get it done. If in my example, if I say that a particular income is exempt and I have paid tax on it, then what is to be done in that case? We have a direct CBDT circular which says that it is the duty of the revenue authorities to help the assessee and guide the assessee. So if the particular income is exempt on which I have paid the tax, they should guide me that it is an exempt income, you are not supposed to pay tax. Second, Constitution of India says that Article 265, which says that no taxes can be collected unless there is an authority of law. So if the income itself is exempt, you cannot collect the taxes. So on this two ground, you can take up this particular issue and you can proceed further. One can say that if I had a TDS, I forgot to offer the income to the tax. Now, understand the point. I have not filed return. Now I realize that I have got a TDS. I have got this TDS credit and I have to file a return. I have filed a return. This is open. You can go and file because you are anyway increasing your return from 0 to a particular amount and then you are saying refund. That is a different issue altogether. But if you say that I have filed return, forget to claim a particular amount as a TDS, revised return time has gone past, what is to be done? In that particular case, one can communicate through, we can make an application 154 and get it routed through that level. So that is the first thing I wanted to deal. Now coming to this section 149. Here they are coming up with the first. So first of all, who can file? Any person, whether or not has furnished the return, original belated. If you have filed an original return, you have filed a belated return. If you have filed a revised return, I'm okay with that. You have not filed return, I am okay with that. For any assessment year, can file the updated return at any stage within 24 months from the end of the relevant assessment year. So now this time is up to 24 months. Up to 12 months, if you're filing up to 12 months from the end of the assessment year, probably you have to pay 25% extra. You're filing 2 years from the end of the assessment year, you have to pay 50% extra. So, I mean, आप जितना late जाओगे, you have to pay more amount of cost. That is what is probably the logic. The sooner the better. You're revising. So one can say that if you're filing return in time, no extra cost. If you file return in time, you might not have filed return in time, but if you are filing revised return, filing belated return in time, no extra cost. It is fine. No extra cost. It is absolutely fine. But I mean, it can be an interest expense only because you are filing little late. There can be an interest expense. But you have missed that bus. Now you are filing, or you have filed that return, but you have missed to defer a particular amount of income, or that you realize now your mistake and now you are going ahead. Then you have to pay additional amount of 25% because you have done it within 1 year. If you are doing it after 1 year, it is going to be. But before 2 years, the extra amount is going to be 50%. So that is the first. Now the first proviso says that a person cannot update a return in the following cases if the updated return is a return of loss. If it is a return of loss, it cannot be updated. But if there is a return of loss which I updated now results into a return of income, it can be updated. Has the effect of decreasing the total tax liability, you cannot. Has a results in refund or increase in the refund. So the example which I said, when I return file nahi kara tha, now I'm filing a return, claiming TDS, there is a refund. I'm sorry, I cannot do this. If it results into a refund or increases the refund than what I have claimed previously, it cannot be done. So in those cases, I can go with 154 wala matter. If my case is during assessment, I can claim it. The AO may apply the Supreme Court judgments of Goetz and can say that you cannot make a claim without filing a revised return. But that's okay. This is applicable to AO. Against that order, I can go to CIT appeal. And CIT appeal can consider this because this order is applicable only to Goetz. It is not applicable to the CIT appeal and IT. This is the way. Second provision, 140. So in those 3 cases, ABC, you cannot do. Now again, in those 4 cases, you cannot go and file the revised return whenever you cannot go. Where a search has been conducted. If there is a search conducted, you cannot go and file revised return. Books of accounts have been requisitioned, you cannot go. Survey has been conducted 133A, you cannot go and file revised return. For the year in which survey is conducted and any preceding year. For the year in which search is conducted and any preceding year, you cannot go and file the return. Where a notice has been issued with the effect that search has been conducted at the place of Mr. X and money, bullion, jewelry but belonging to me is found, I cannot file the return for the year of search and any preceding year. When a notice, when a search has been conducted at some place, Mr. X, some chitti, some documents, some lifafa has been found, which is pertaining to me, or any information containing therein is relevant, is pertaining to me. I am sorry, I cannot file the return, updated return for that year and year. Not a year or not only for those relevant years. For any year, I cannot go and file the return. So actually, originally the words were different. Now they have said, if you refer to this particular document, I mean, if you refer that originally, if you refer the finance bill which was passed, they said that 140.39.8 as proposed by the finance in 2022 provides that in the aforesaid circumstances, the person shall not file the updated return for the assessment year relevant to the previous year in which the search is initiated or survey is conducted or requisition is made, and 2 assessment years present in the assessment year. So finance bill has said that the year in which search conducted and the 2 past year, you cannot file. But before that, you can go and file if it is available. Now here they say that no, they've deleted the word 2 assessment year, meaning thereby I cannot file it for any year now. That is what they have done. The third proviso says that updated return cannot be filed in this situation. Meaning if you have already filed an updated return, matter ends. You cannot get the opportunity again. It's one-time opportunity. You have filed it, updated, now you cannot. Any proceedings, assessment, reassessment, recomputation, revision of the income is pending. Meaning thereby 143.2 has been issued, it is done. See, 148A notice is issued, the assessment proceeding is not pending. If 148A notices come, I want to file an updated return, I can go and file the updated return for that particular year, if otherwise it is permitted. After 148A notice, order is passed and none 148 notice is being issued, then the proceedings are considered to have been pending. If the assessee has the EO has the information in respect of the person for the relevant year Act or the Prohibition of the Benami Property Transaction Act or the Prevention of the Money Laundering Act or the Black Money and Imposition of the Tax Act, and the same has been communicated to the assessee. If he has got the information under this act about me and he has communicated before I file an updated return, I cannot. But he has not communicated prior to it about filing an updated return, then there is no problem. That communication should precede. Information for the relevant AY has been received under an agreement referred to in 1990, so double taxation avoidance agreement, and any prosecution proceedings have been initiated in 148 is not permissible. Now the 4th proviso. This 4th proviso has been inserted by the finance bill. So because we are aware finance bill was passed, the 4th proviso was not there. Now at the time of passing an act, the 4th proviso was added. They have said that if you are filing, let's take an example. If you are filing now, 4th and 5th provisos have been inserted. So I'll straightway take you to the example which will give you the better clarity on the subject. Let us say that I have got 1920, 2021, and 2122. Let us say this is the situation. My 1920, I have got a loss 20 lakhs, so I claimed loss. I'm carrying forward 20 lakhs loss. 2021, I have got income 10 lakhs, so I have set off the 10 lakh loss out of the 20 lakhs. So I have got carry forward loss 10 lakhs. 21-22, I have got 10 lakhs, 80 lakhs income, 10 lakhs loss carried forward, and now I have got income 70 lakhs. This interpretation is sorry?
Nothing, sir. Nothing. Carry on.
Now let us understand that. Let us say that I realize now for FY 2021, I have got some other income of, let's say, 25 lakhs of rupees to be reported. Now, if I report that other income of 25 lakhs, you can say that this 10 lakh plus 25 lakhs I add, so my entire loss of 20 lakhs would be adjusted, because last time I adjusted only this 10 lakh. Now my entire 20 lakh would be adjusted, so my carried forward would be 0. Correct. So my carried forward is going to be 0. So they say that you have updated for 2021. Now you will also have to update for 21-22 as well, because next year has also to be updated, because otherwise you have rectified now, but the other carry forward would continue. So this is what they have said. So now the revised one is here. 10 lakh, 25 extra, 20 set up. So my income is 15 lakhs. Brought forward loss has gone 18 lakhs, and then this is 80 lakhs. So this is to be done even for a MAT credit. Even if you're doing a MAT credit, then also the same exercise is required to be done. So this is how you have to go and pay taxes. Now the next issue is that how to compute the tax amount to be paid. So if you have not filed an original return, the situation is clear. Tax payable including interest after taking into account the following, meaning thereby whatever tax is payable, take the credit of advance tax, take credit of TDS, take credit of relief, foreign tax credit, MAT and AMT, whatever amount is available, you have to go and pay the tax. When you have not filed any return, you are filing the return now. But if you have filed return, you have paid taxes on it, then do one thing, file your return, calculate the tax payable on the total amount, then remove the amount of taxes paid on the income which you have already offered, remove the advance tax, remove the TDS, remove the TCS, remove the MAT credit of that particular income which you already offered. Now you are offering some new income. Whatever TDS credit is available for a new income, take that. Whatever foreign tax credit is available for a newly income offered, take that amount as reduction. Take the MAT amount as reduction with respect to if the MAT credit is available. Then whatever amount is left out, then you have to pay tax. Let me give you a simple example. I have filed return of income saying that my income is 5 lakhs of rupees and my TDS is, let's say, 10,000 rupees on it. So 5 lakh of rupees is my income, 12,500 is tax liability, rebate 12,500 rupees, 10,000 is a rebate. I have filed the return, matter ends. Now again I am filing the return saying that now my income is 6 lakhs of rupees. On 6 lakhs, my tax liability is going to be what? 5 lakh 12,500. On this 6 lakhs, 1 lakh 20,000, 32,500. I am ignoring education sales and surcharge for the ease of the understanding. 32,500. I have also taken a refund of 10,000 rupees, which I should not have taken. So that effect is supposed to be given because I have taken a refund of 10,000. So I should have paid 22,500 at that point of time. But now it is 32,500 minus 10,000, 22,500. This refund is available to me. It has already been received by me. So I am not going to take the credit. Now it is 32,500. If at all there is any interest payable because it is exceeding 10,000, there will be an interest applicable to it. Whatever may be the amount, let's say that including interest, the amount turned out to be 40,000. I am filing it within 24 months. It is 25% extra, so 10,000. I am filing it within 48 months. It is going to be 50% extra. This extra amount, and I have to pay 60,000 or 50,000 as the case may be. Unless I file this, unless I pay this, it won't happen. ITR-U is the form which has now been notified, and that form is to be filed, and which will result into this, which will result into the completion of that issue. So once again, if I do this, the entire issue here is to ensure that the litigation can be avoided. Benefit is given to the assessees for the purpose of avoiding the litigation. They are not supposed to go to a long drawn process of assessment. The entire intention is to use this mechanism in the favor of the revenue, not in the favor of the assessee. 264 is available, 154 is available. If he is already in the assessment proceedings, he can already make a claim before the AO may not admit the claim because the go-ahead is against assessee. But then he can go to the Supreme Court, and then in the case of the he can go to the appeal, and he can go to the appeal. The appellate CIT appeal can definitely apply this particular. CIT appeal has got the power to entertain the additional claim, and for that we have got several judgments. So I would say this is all with respect to updated return as well. So with this, I have completed the topics allotted to me in the time which was allotted to me. I convey my sincere thanks to both the branch, Pondicherry branch and the Salem branch chairperson of Pondicherry branch and the entire managing committee, Pondicherry branch chairman sir, of Salem branch and the entire managing committee for trusting me and allowing me to present my views. If I have said something, somebody felt being that, I sincerely convey my apologies for the undue inconvenience. I enjoyed deliberating with the branch. I expect the same from the members as well. If at all there are queries, it would be a pleasure dealing with the queries.
So there are queries in the chat box. Is it
Sure.
visible? Yeah.
Section 139(8)(a) mentions that no reduction of tax liability, increase in different, etc. in respect of the income already filed, and not those cases where no return were filed. As per the memorandum explaining the bill in Finance Act 21, where the nil tax liability claiming of refund of TDS, etc. can be done in ITR-U in case it was not filed already. The intention of ITR-U filing is avoidance of litigation. Yes, intention of ITR-U is filing avoidance of litigation, but what you are suggesting here is that if I have not filed return and now it is reducing, I do not as of now subscribe, but I'll get back to you on this. I'll get back to ma'am on this particular query if at all this is the situation. Whether the Supreme Court discretion direction dated 4th May 22 may be helpful to move 154 request as mistake apparent from record. I didn't get this question. If the gentleman can elaborate, please. I mean, okay, he said saying further. I mean that in case of concluded 147 assessment before 31st March 22, for which notices issued under 148 between 147 and June 2021. So it is not a mistake apparent on record, basically. It is precisely not a mistake apparent on record. So he cannot revive the matter. He cannot once again, give a second birth to this matter by applying 154. That is certainly, the matter has already been concluded. So this 154 to my mind is certainly not possible. Whether penalty is not imposable under ITR-U filing, the answer is no. There cannot be, because you are already paying extra amount of 25% or 50% of the amount. So there cannot be a penalty, because the intention is to avoid litigation. Intention is to keep you outside the penalty and the stuff. So if there is a penalty anyway applicable, why would I go and file it? So there is no penalty. Apart from the article.
No, it's not questions, sir. Sharing of material.
Achha, okay.
Oh, okay, sir.
I would share that. That's not the moment the session ends. Okay. Ma'am's number, I would be sharing that PDF files to the ma'am. Within
so
10
nice
minutes,
of you.
It is my duty, ma'am. It is my duty, sir.
Thank you, sir.
Thank you, sir.
There is one question. It's a pendency. I will get back to you by Monday, ma'am. I'll share the answer to that question.
Okay, sir.
The only request that you can just WhatsApp that question to me. That favor.
I'll do that, sir.
Thank you, ma'am. Thank you. I'll share that.
Dear members, any query?
No, sir.
Sir, I have one query regarding one order came for the Commissioner Appeals yesterday. This is not relating to this section, what you have taken on today. It's all about 234E. In a company, we have filed for some 3 to 4 years on 234E. Nearly about every quarter is considered to be a separate appeal. So we have filed about 20 appeals. So for 5 years, we got 6 different orders. Out of 20, 5 are favor to us and 15 are against to us. But even in against, whatever they mentioned is like totally irrelevant from one order to another order. I know it's transferred to make different persons, but only one point is, as per my understanding, 234 is applicable from 1st June 2015 onwards. But in many orders, they have mentioned as 1st June 2012, not exactly 1st June 2012, from 12/13 onwards. Can you just explain that what sort of interpretation it was?
Can I order or something like that? It would be easier for me to deal on this. Certainly, I would like to answer this, but then if I can just read exactly, then I would be in a better position to.
No. See, I have already shared in this in social media. I don't mind to share you. I'll put it in screen. 1 minute, please. Just a minute.
Yeah, sure. Meanwhile, let me also open the act part as well, so that it should be easy.
No, I'm not able to share the screen share.
No worries. Let back on this. It's an interesting question which you have referred. I'll definitely get back. I'll close this by Monday. That's not an issue.
Kumar sir, can you allow me for a minute to share my screen?
Yeah, please, take your time. Take your time.
Sir, hope you are seeing the message.
Yeah, just give. I'm trying to zoom 1 minute.
Yeah, please.
So I'm sorry, I'm not able to read. If you can,
Is that okay?
a little more, please. A little more zoom in. Yeah, a little more. Without prejudice. Yeah. Without prejudice to the provisions of this act, where a person.
Above finding a decision.
Okay, the matter has been considered. The section 234 was inserted by the finance of 2012 with effect of the first 2012 in chapter so and so. Considered levy of fees in certain cases. Subsection 1 of section 234 is to met as under. Okay, from the aforesaid, it is apparent that the term displayed by the statute is fee and not penalty. Then probably you have to read penalty. If you can read post that.
Without prejudice to the provisions of Act, where a person fails to deliver or deliver statement within the time prescribed in subsection 3 of section 200 or the provision of subsection 3 of section 206C, he shall be liable to pay by way of fee or a sum of 200 rupees every day during which the failure continues.
Subsection 1 you are referring to, right?
So my only point is 234E, there is a section was not introduced during the Finance Act 2012.
You are right. So it cannot be applicable post. It can be applicable post 1/6/2000.
Madras High Court is very clear. Karnataka High Court is very clear. Telangana High Court is very clear. A landmark judgment was given in the name of Indrani. Even I can share you the case personally. But these people are taking some other case which is not relevant to the situation and they pass the order.
No, so basically I completely agree. Even I just saw the Karnataka High Court is precisely in your favor, basically. So I guess jurisdiction is the Karnataka High Court, right?
Correct. No, the matter is I belong to Tamil Nadu, but the landmark judgment was taken as Indrani case of Madras High Court that every person used to take that order. No,
so I believe that it is. I mean, so far as Gujarat High Court is frankly speaking against, but then Karnataka High Court is in favor, and so far as the High Court is not, I mean, your jurisdictional High Court has not taken a view on a matter. It is always when the two views are available, view favoring the assessee has to be taken.
Correct.
And for that, you can apply the Godavari.
Okay. Sir, court judgments I do agree that one is favor to department, another thing is favor to assessee. But the matter mentioned over is 230 was not inserted in Finance Act 2012. But appeal people are using the sentence in such a way that we are not able to in the position to prove that because night 1 o'clock the order came on day 4 yesterday. I haven't received any show cause notice. I'm not show cause notice like any pre-draft order like that.
Okay. So it is once again, I mean, it is precisely violation of the faceless appeal scheme then.
Exactly.
It's absolutely precisely a violation of the faceless appeal scheme.
For not only this, sir, many issues, many sections, 43B, 37(1). I have a couple of cases which is to be, fundamentally constitutionally wrong. We are passing the order.
So, I mean, if those fundamental errors are there, they are fit case for a REIT. But unfortunately, if you go to a REIT, High Court will once again ask the CIT appeal to pass the order again.
So what is the next thing to do for this matter, sir?
Two options are available. Option A, go to High Court, and the High Court would pass an order saying that go to CIT ATFL and ask CATFL, I mean, do direct ATFL to pass the order again, considering your reply. That is one possibility. Option number 2 is you can straightaway challenge this order before ITAT, and ITAT would straightaway pass the order because now you are anyway challenging the order.
Yes.
Better way is, rather than going to High Court, better you go to the ITAT.
The challenge with ITAT is I want to pay that 100% amount, then only able to go. But the company is not positioned to go for that thing.
Okay, I understand.
So that is the issue. See, for many cases, people are not understanding the content of the thing as well. The assessee is not able to go further appeals.
Agreed.
I just thought of sharing you, nothing.
I understand. Completely understand. I understand the concern.
Okay, thank you.
I completely understand the concern.
Thank you, sir.
Pleasure.
Kumar, sir. Madam.
Over to CA Kumar, sir, Secretary of Salem branch, to propose the vote of thanks.
Very good evening to the members present here. It's been, I could not feel that, 2 hours, 10 minutes have, passed. It was like a thriller movie we had. Thank you so much, sir, Mr. JIGNESHKUMAR, sir. Thanks a lot. You have been very kind and you accepted our invitation. And the more we dig, I think we have a number of hours to speak, and I think we are very fortunate to hear beautiful insights on this day, and we are very thankful for the time you have spent with us. Thanks a lot. I'm sure that every member here, just like Manju Bashni ma'am, I think she flooded with a number of queries in the chat box. Yeah. So, ma'am, you are muted. It's yeah. So it's like all the members here are very fortunate to have your thoughts on all that queries. Thank you so much, and we'll be requiring your support in the future time as well on the subject as well. Yeah. Thank you so much. Thank you all the members. Over to Shankar. Thank you.
Yeah, thank you all. The meeting is adjourned. Thank you very much.
Thank you, sir. Thank you, sir.